To the commodity markets now. Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking this morning?
Well, I'm looking at the metal as a sector which has seen profit taking for a second straight day today in the markets there. Well, we are looking at prices slip also ahead of the China third quarter GDP numbers that come in today, and the markets are jittery ahead of that as well. The expectation, though, clearly that you could be looking at weaker numbers coming in out of that country there. China also has avoided the rate cut as we saw those numbers come in yesterday, and the weaker yuan continues to weigh on many of these commodity markets within China itself. Also, the government-led infrastructure, especially in case of renewables, has led to demand come back in case of metals. But as far as automobiles or real estate as a sector go, we have seen weaker demand in China continue there. I'll talk about some metals here, and copper prices for one is trading at near 5-month lows. In the Indian markets on MCX, we've seen the prices decline below 700 rupees a kg as well. If you look at LME and Shanghai, we've seen inventories continue to gain onto this one. Also, supply, as according to EIA and International Copper Association, is expected to increase by 26%, but that is by 2035. They also say that the demand will, though, increase by 50% during the same period. So when you look at the longer period for copper as in sense of demand and prices is expected to be much on the higher side. But at this point in time, there is weaker demand, higher supplies, higher production, and that continues to weigh onto the market there. That's about nickel now, where we have seen prices trade at a 2-year lows. That is because the EV battery prices have declined by 10% in the month of August. The inventories have been on the higher side. Demand has slipped, and that's weighing in case of nickel as well. Also, when you look at the steel prices, they have been on the weaker side. That's weighing onto this one. If you look at the inventories, they are the highest in last 10 years, and the prices have continued to decline on back of that. Aluminum for other metal also has seen decline below $2,200 a ton there. We have seen prices decline by nearly 4.5% in matter of last 1 month. And that is a chart that will show you that. If you look at week-on-week basis, only iron ore and steel in some sense are trading in the positive. Rest all the metals are trading in the negative for week-on-week and in month-on-month basis as well. The best gains clearly coming in for the iron ore prices in last 1 week, up by 4.5%. And that is because the inventories have declined for a 5th straight week. We are looking at lower onshore and offshore inventories in case of China there. Also, when you look at the inventories, they are the lowest since June 2020. So iron ore perhaps is your best performer in last 1 week. Every other metal trading in the negative.
Okay, all right. Thanks a lot for that, Manisha. Well, let's hop across to Surbi.